The US dollar index has had its worst year in 52 years. Gold has enjoyed its best year in 46 years. Friends, take a few chips off of the table if you have a runaway gain in your portfolio. Please don't make me beg you. Is it possible that the US dollar next year will have its worst year in 53 years? Maybe. Statistically, it's unlikely. Is it possible that gold will enjoy its best year in 47 years next year? Maybe. But statistically, it's unlikely.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we're here with Tom Hartel. I met Tom out at the 2025 Rules Symposium in Boca Raton, and he gave us some hot tips on platinum and silver. And so far, in the last few months, those have been a hit. So he is invited back here today for some new wisdom on platinum and some other topics we're going to talk about. I'm really excited. I think you're going to get a lot out of this interview. Tom, thank you for coming back on the show.
Steve, it's great to be here. I really appreciate you inviting me back. And I want to thank you because as a result of our first interview together, I made, let's say, 6 new best friends. They're highly capable and intelligent investors. And some of these folks I chat with every day. So I want to thank you for having this podcast and having me on.
Awesome. You know, that's always been my goal, is just to kind of create this community of investors and people just looking to get better at growing their wealth and, you know, eventually philanthropy. And so that's awesome to hear that. That's one of the reasons I do this. So that's fantastic. Okay, let's, I'll just open it up to you. What's on your mind right now? What are you looking at? Give us the latest.
I'd be happy to. But first, from Larry Lepard's book, The Big Print, let me read from that. And this should be an overriding theme for our video today. If we understand that fiat currencies are programmed to be debased and diluted over time, then each of us must develop a plan to counteract this. Larry challenges us to consider investing in precious metals, Bitcoin, commodities, and many other non-traditional assets. And one disclaimer here, please know that none of the companies I'm going to cover today should be viewed as urgent buys. I ask your viewers to research them and form their own conclusions.
Okay, so governments are printing fiat currencies by design. They are meant to be debased. The way we can protect ourselves from that is by real things, commodities, especially precious metals. And none of these companies are to be taken as something that needs to be taken action on today. Do your own due diligence.
Precisely.
Okay, noted.
So, to kick it off, this pick comes from viewer Toby with additional research provided by viewer Luis. Of all the new friends I made as a result of your show, Luis and I are the closest. We do chat several times a day. And he decided to participate in the Battle Bank offering as well. So Galiano Gold, ticker symbol GAU, it's trading at 218. Galiano operates one of West Africa's largest gold mines in Ghana, which is Africa's top gold producing country. They bought the mine from Gold Fields in March of 2024 when the gold price was much lower. Gold Fields owns 20% of the company, Equinox Partners 11%, and institutions 48%, with the balance retail investors. Quarterly production at Galiano has been disappointing until recently. The head grades were around 0.8 grams a ton gold, which is well below the reserve grades of 1.2 grams per ton. Galiano just added a secondary crushing circuit at the end of July. This should increase processing by 21% to 15,900 tons per day. Their 2025 guidance is for 150,000 ounces of gold at a cash cost of under $2,000 an ounce. Galiano was profitable in the last quarter, but the high costs were due to moving tremendous amounts of rock in order to reach the good payable material. So in other words, Galiano has been choking on lower grade rock from day one in order to get to the good stuff. I'm looking for head grades to rise by 50% in the near term to 1.2 grams per ton in order to meet their 2026 production and all-in sustaining costs. Guidance for 2026 is for production to range between 180,000 ounces of gold to 210,000 ounces of gold, with downward pressure on AISC to below 1,700 an ounce. Now, this next point, very important. Galiano has 2 million ounces of reserves plus 4.5 million ounces of resources.
Wow.
Recent drilling has discovered gold grades 8 times higher than head grades. For example, 23 meters of 6.8 grams per ton gold and 16 meters of 5.3 grams per ton gold. There's clear potential to increase reserves by several million ounces because the deposit is open along strike and depth. Their market cap is a paltry, emphasis paltry, 550 million. They are completely debt-free with 155 million cash in the bank. I believe that this mid-tier can triple by the end of next year if they deliver on the production goals. Galiano is targeting a 75% increase in production over the next 24 months, peaking at 254,000 ounces of gold by 2027 at an AISC of $1,200 give or take. Let's note that other major operators in Ghana include Gold Fields, Newmont, Anglo Gold, and Asante Gold. A quick comparison, their current annual production is similar to Aris Mining, which enjoys a $2 billion market cap, and West African Resources, which enjoys a $2.3 billion market cap. Again, Galiano is in the 500 million market cap area. Management has deep experience in mining, and the shares do trade options. One important non-trivial risk is that this is a one mine, one country company. I am overweight this name, and I know for a fact that other of our friends on X who manage big money and have 1,000 times more followers than I do are also overweight Galiano. The shares are up 78% year to date, and I am buying on dips. I must note the following regarding the share's recent weakness. On September 8th, security guards on routine patrol encountered illegal mining activity on the property. The illegal miners fled, but in that process, a young man fell into a pit and drowned. This is unfortunate, of course, and I feel for the family. We do not see this one-off event as a showstopper. And I'm reminded that Warren Buffett encourages us to buy good companies that are experiencing temporary challenges. Longer term, Galiano is an ideal takeover candidate with their significant reserves and resource growth potential, working in very close proximity to majors. That's our first pick of the day is Galiano Gold. Buy on weakness or fiddle with the options if you so choose. Thank you for pulling up the chart. Please give us some color on that chart.
Okay, yeah. Okay, so some majors are in this, which is always good. Basically, their all-in sustaining cost was $2,000 an ounce, and that is forecast to go down because as I'm going to try to simplify this as best I can. Basically, they've been stripping off the top, which has been low grade, and they're getting to better and better grade as they go down. So their all-in sustaining cost is going to go down to $1,700, hopefully $1,200 in the future. As a big deposit, 12 million ounces of reserves, 4 million ounces of resources. And if we compare this to similar company, they're at 4 times the market cap that this one is. Also in the area, we have some big players, which is always good that you have other big gold miners in that region. The principal risk that you see is that this is a one country, one asset deposit. I really perked up when you said that this one allows options. Maybe some long dated call options on this, timing them with the technicals could be very, very profitable. As far as like anything on the charts, I would say kind of at a point, let me pull up a little longer term here so we can really take a look. Okay, so this is in longer term. Let me go, that's the monthly. Here's the weekly. Okay, so there is a bit of support where we are now, simply from this one back in July of 2020, and then a little bit more support down around a buck 90 on the NYSE. And if we get into a little more, how can I say it, kind of shorter term here, this is a quasi cup and handle pattern. It's not perfect, but it is there. And basically we need a run up like this. The part I don't like is that it went like that and then came down. But if we ignore that and just kind of give the cup and handle a little bit less of a probability, what we could have here is an ironing out of a super bullish cup and handle pattern, because the right side of the cup is higher than the left side. And we want to make sure that if this is the handle that's actually forming out right here, we ideally would like it to come down here around $2, but it can't go lower than $1.86, which would actually line up with some support right back here. Yeah, that could be really, really good, especially with all the bullish fundamentals that you're talking about here. I mean, this could have a measured upside target, and we still have to see if this actually is the handle that's ironing out. And remember, since we had this little blip down here, this kind of, you know, if you have a perfect cup and handle like gold, I'll use that as a perfect cup and handle pattern. I would say that cup and handle pattern is 90% reliable, you know, from the long 13-year cup and handle pattern. I would put this one as probably 70%, but the possible upside target, let's say the handle went down perfectly to the 38% retracement, that could bring this all the way up to, you know, just south of $4. Awesome. Well, thank you, Tom. Thank you.
It's my pleasure. Did I
Yeah.
mention that they're debt free?
Yeah, debt free as well. So that is always nice when they don't owe the bank.
I can't emphasize that enough.
Yeah. Okay.
Okay.
Cool.
So
All right.
thank you for the charting.
Yes.
Moving on, Finland. A few of your viewers asked me to look at Finland as it relates to Agnico Eagle.
Okay.
So Agnico as a company is generating multiple billions in annual cash flow, and they could easily be debt-free by year end, if not sooner. Agnico's very first mine outside of Canada was the Kittilä mine located in Finland. They've been operating there since 2009. This is a long life gold mine with reserves projected to last into the late 2030s. At 4 grams per ton, the grade is far higher than the company average, which is in the ones. Kittilä produces approximately 240,000 ounces of gold annually at a cash cost of $1,000 an ounce. Finland is the top mining-friendly jurisdiction, according to the Fraser Institute, #1. But Rick Rule reminds us that is a survey, so take that as you may. That Fraser Institute ranking is a survey. Agnico, long and short, is making bank in Finland. They're clearing over 500 million a year at these prices. Not in revenue, that's in margin. You've heard the phrase, Steve, WWJD. Have you heard that? What would Jesus do?
Yeah.
Yes. So on X, some folks are asking WWAD, what will Agnico do? Now, in Finland, since they're making bank and the grades are so juicy, I came up with 4 companies for your viewers to look at. Rupert Resources, Orion Resources, Valkia Resources, and Firefox Gold. Rupert has the highest market cap of the bunch at 1.3 billion, but their average grade is half of what's being mined at Kittilä. Their project economics are still robust for them. I look at Rupert as a good company. Personally, I'm long Firefox Gold, ticker FFOFX, Frank Orange Frank Xylophone. They have a large land package in Finland. Agnico is already a major shareholder, hint, hint, and an exploration partner. And Prescat owns 12% of this company. I'm a huge fan of Tavi Costa and his team. Prescat owns 12%, and Michael Gentili, the famous mining investor, is also an owner here. I'm impressed with some of their early drill results coming from Firefox's program. 13 meters of 15 gram per ton gold and 0.8 meters of 100 gram per ton gold. The executive bios reflect a who's who of experienced managers, and several of them came from Agnico. So, Steve, I think we should try to organize a field tour since the northern lights are visible just about every other day in Lapland, Finland.
I think that would be a lot of fun. That would be a
Me
very,
too.
very fun trip.
We'll see if the company will comp us. So Firefox Gold. Okay, moving on. We're going to have some fun today with platinum, which I see platinum and silver scored multi-year highs just today.
Yeah.
This is going to be fun.
Okay, let me just pull up the platinum chart here just so this is catnip for our audience. Okay, there we go. So platinum, this is really exciting. We have this trend line here that's gone back since 2016, and it hit again here in 2021, and then it hit again of July of this year, and now we just broke through it today. So if we can close above this trend line for a weekly close, which we're recording on Thursday, this comes out on Friday. If you see it above this trend line, I think that's a buy, and that would be basically above, I don't know, 1530 or so. If we get a weekly close above that, that's a breakout of platinum in a trend line that almost every technical analyst that looks at platinum is looking at. So, all right, go ahead, take it away, Tom.
Will do. So, Steve, platinum's market tightness is here to stay. The World Platinum Investment Council expects a supply deficit through at least the year 2029. This year's projected deficit is around 1 million ounces. Next year, 900,000 ounces, then 800,000 ounces after that. Above ground stocks are depleting rapidly, with 2 million ounces available, which is a 3-month cover for world demand. Important note. The U.S. Secretary of the Interior will most likely include platinum as an official strategic metal when this list is finalized in mid-October. Just a matter of days away. Steve, I ask you, what if Donald Trump visited the 250 miners that are employed at the Stillwater mine in Montana? Platinum is a small market. If he did this, you could see it shoot up by 500 an ounce in short order. Interesting note, this platinum-rich vein in Montana, and it's controlled by Sibanye Stillwater. This platinum-rich vein, or you could call it a reef, is 28 miles long. Now, I ask you again, and your viewers, what if the World Platinum Investment Council hired Sydney Sweeney to promote platinum? We saw American Eagle shares rise by 100% when her Blue Jean ad launched in July. Now, I went to AI and was given the following slogans for Sydney to use. The power of platinum, own the metal of tomorrow. Feel beautiful, wear platinum jewelry on special occasions. But the best one, I play with my platinum every night, then have the camera zoom in on her as she's playing a game of chess with platinum pieces. And to make things extra spicy, she could become a platinum blonde for this promotion. So we need Sydney to encourage investors to move some of that $7 trillion that's parked in money market funds into all of the metals. But on a more serious note, what if more governments, central banks, wealth funds, family offices, individuals, and manufacturers, Ford Motor, GM, Chrysler, began to stockpile platinum? Recall, they're out of business if they run out of the stuff. Production halts. A quick update for your viewers on Sylvania Platinum, which is poking around its new 52-week highs as of today. Sylvania Platinum reported a terrific quarter, and they predict steadily rising cash flow yearly for at least the next 4 years. So actually a 4x on cash flow by 2028. I'm overweight Sylvania Platinum, and inherently they're a conservative company. So if they're telling us they're looking for a 4x by 2028, I expect even a little bit better. I took a look at their capital expenditures during this time, and they're reasonable, if not a bit on the low side. So Sylvania Platinum is massively overlooked. I wish that they had really a fully American symbol, and folks didn't have to trade with that F on the end, SAPLF.
Yeah, over the counter.
Yeah. So overweight Sylvania, and the chart's looking pretty good there. If you would please, for me, pull up the Sibanye Stillwater reserve slide for us.
Okay. And Sibanye Stillwater, you can see it?
Yeah.
Okay.
Thanks. Great. So Sibanye Stillwater, ticker SBSW, they have 47 million proven and probable in platinum, again, P&P, and 10 million P&P of gold. These are non-trivial numbers, but if you look at their
Sorry, Tom, you're saying proven and probable, which is the best that they can, the most certainty that they can have.
Yes, thank you for clarifying. So 47 million proven and probable platinum PGMs, 10 million P&P of gold. But if you look at this chart, I mean, it'll blow your socks off. So US PGM operations, that's that Stillwater mine I referenced earlier in Montana, 79.1 million. And South Africa PGM in the lighter blue there, 180 million ounces. Look at their South Africa gold operation, 35.7. South Africa gold projects, 15.5. And they own a big chunk of DRD gold. When I stare at this chart, the market cap of SBSW at 11 billion is ridiculously low. Compare these reserves, if you would like your viewers to do this, to Numa, Agnico. Now, I realize South Africa deserves some sort of a penalty, but why don't we compare these reserves to Impala Platinum, which has an $11 billion market cap. So again, Sibanye, 8 billion, Impala Platinum, 11 billion. SBSW is undervalued in my humble opinion.
Okay. Even though we've had a nice little spike in Sibanye Stillwater, it's nothing compared to where it should be, in your opinion, especially if we get this on the critical minerals list here in a couple of weeks.
Amen. I couldn't have said it better.
Okay.
Next, Steve, please pull up that Bernstein Platinum demand slide for us.
Bernstein Platinum demand and boom. Okay. You can see it, correct?
Yeah. Oh, yeah.
Okay.
This slide should be updated by Bernstein. It's more than a year old, but no one else has a slide out there like this with such a bullish industrial demand for platinum. This is primarily being driven by hydrogen production. In order to produce hydrogen in mass, you do need platinum. So, no one else has such bullish demand forecasts for platinum, and I felt it was useful to put this chart up here.
Yeah. Okay. So this is going back to 2004 for anyone watching on their phone, and then forecast out to 2040. And basically what we can see is kind of the same demand forecast for chemical, petroleum, electrical, glass, medical, and other. This turquoise, or whatever, light blue, whatever color that is, I'm a guy, so I'm terrible at colors, is forecast to go up. And this is the hydrogen that you're talking about, that if we end up going to more and more hydrogen fuel cells, they're going to need a lot of platinum for it. And that's where a lot of this demand could come from. Is that what you're saying?
Exactly. Now, the first industrial area that has transitioned or will transition to hydrogen fuel cells looks to be forklifts. So if your viewers study what's happening in the forklift industry worldwide, and I think there's a company, Plug Power, fiddling with that.
Plum Power?
Plug Power.
Plug Power.
PLUG.
Okay.
Good things are happening with forklifts and hydrogen fuel cells. My conclusion in platinum is as follows. The incipient rally in platinum, which has been overshadowed by gold's headlines, merits further study.
Well put.
Okay, moving on. Here is an industrial pick. It's very close to its all-time 53-year highs. So either hop on that train or buy on dips. The company name is Friedman Industries, FRD, trades for about $22 a share.
Okay.
This is a Texas-based manufacturer and processor of steel products established in 1965. I have owned this stock for a very long time. It used to be like watching paint dry, but no longer. The shares are up 48% this year, trading near an all-time 53-year high. Here are some of the catalysts. The steel and aluminum tariffs are holding firm. Trump is very serious about onshoring more of our steel and aluminum production. U.S. Steel, which of course was taken over, Steel Dynamics, Cleveland Cliffs, and Nucor have all seen their share prices rise very nicely year to date. Steel Dynamics, that's STLD, reported an upbeat outlook for the rest of this year. Jeff Gendell, the executive chairman of IES Holdings, a very large contractor based in Houston, has been scooping up shares of Friedman. He now owns over 5%, while his IES Holdings stock has risen by 1,000% over the past 5 years. It's possible that Mr. Gendell is one of the wealthiest people in Houston. Richard Delisle from Delisle Partners has also been scooping up shares and now owns more than 5% of Friedman. Other notables are adding shares as well. A few years ago, Friedman acquired several steel mills in the Midwest for pennies on the dollar. Recently, very recently, they acquired Century Metals, which enjoys a solid market share in the southeastern U.S. So Friedman has done a good job buying struggling mills and then turning them around. Things are getting exciting at Friedman. They recently created a new position and hired Gaurav Jabbar as COO. Gaurav is a big gun with a distinguished career in the metals business. He earned his engineering degree in India and holds an MBA from the University of Chicago with a double major. It's pretty clear to me that this exciting new hire will accelerate Friedman's growth plans. Now, here it gets interesting. Earnings per share were 71 cents in the most recent quarter. If Friedman can earn $2.80 a share for the year at a 20 multiple, the stock zooms to 56. Again, it's 22 now. I have sell orders working in the mid 40s. They paid a dividend every quarter since going public in 1972. No analysts have followed the company, possibly ever. They have a low share count and a tight float. Market cap is 160 million with sales at 500 million. Very strong balance sheet. Recent trading volume has gotten my attention. What I like about these low share count, tight float companies is that if, I'm just saying if, a Momo trader gets a hold of it, look out. We have so many examples of this. The low float, low share count runners. Just a few are the Koss headphone company out of Wisconsin, which the Momo guys ran from 3 to 61. Anyone can pull up the historical chart. Comstock Inc., which they ran from 10 to 100, and Cartoon Studios, which they ran from 2 to 114. I'm not suggesting that your viewers buy Friedman Industries, but it'll sure be fun to watch it. And if they do decide to buy it, maybe buy it on dips. But something's going on here and it excites me.
Yeah.
Do you have any comments on the technicals?
Well, first and foremost, I can see what you're talking about the, okay, so let me go to the financials here real quick. Okay, so you're saying if earnings per share get up to, what'd you say, $2 and something?
280.
280, okay. And price to earnings ratio gets up to 20, which it's at 18 right now. Market cap 150. Super small. And when I look at so far today, and we're just a few hours into the market here, the volume is only 8,000 shares. So a higher volume last week was 118,000 shares, very, very low volume. Okay, as far as technicals here, kind of in no man's land, because like you said, we're at some highs here. I would probably, how would I forecast this? Well, first and foremost, I see a little bit of a channel here. So I see a bit of a parallel channel. Going something like somewhere around there. Bring this down a little bit. It's not perfect, and that's a little bit of an outlier. I'm not sure. Maybe the parallel doesn't work as well. Probably up towards the upper range of that a little bit. We do have some high RSI, maybe a little bit of a pullback here. So I would be looking at buying opportunities around 18, and then especially if it got down here, a lot of price action right in here. So maybe around $15, $16 might be kind of where that might be the green line, right? Maybe the red line up 1950 and then 1750, and then the green line somewhere around 15 and a half, $16, something like that. Yeah, as far as any patterns here, I mean, it's kind of already happened, so it's a bit of a moot point, but we do have a pattern here that's kind of like a triangle pattern, right? And usually you can kind of take that amount and move it up, and it looks like we've already gotten there. So I would be waiting for something else to form out and kind of look at those levels that I just mentioned. There is an off chance here that what we're forming in the meantime, so you got a little bit of a bull flag here that broke out to the upside, and then a little baby bull flag that did the same thing. And if we look here, it's not perfect, but it could be forming up some type of like triangle pennant pattern to do it again. But again, I'm not really one of those breakout guys, so I'd be looking for kind of a retrace. It looks like it's getting a little lower here on the RSI, so I think we might be able to get it cheaper. But maybe that's just my optimism.
Thank you for that.
Yeah.
Okay, moving on to a biotech company, Immunity Bio, ticker IBRX, trading at 242. I am not a biotech guy, and I have plenty of scars from this space. This idea comes to us from viewer Luis, but I'm intrigued by this one. So on March 25th of this year, Tucker Carlson interviewed Dr. Patrick Soon-Shiong with the interview titled Cancer Rising in Kids. This interview is readily available on YouTube. It is a truly fascinating and informative interview that I very highly recommend your viewers watch. A few facts about Dr. Shiong. He's on staff at UCLA. He earned his bachelor's degree in medicine at age 23. He earned multiple graduate degrees and too many awards to list here today. He is a transplant surgeon. Most of his 50-year career has been spent researching treatments for cancer. He has formed and sold several businesses for multiple billions. He invented the cancer medicine Abraxane. He's the richest man in LA. He owns part of the LA Lakers. He owns the LA Times. He's given half of his wealth away to charity. During COVID, he invented a highly effective vaccine. He doesn't like the term vaccine. He prefers the word bioshield. But it was shunned by the previous administration. Dr. Shiong was willing to roll out the medicine nationwide using his own money, up to $3 billion. He was ordered to stop work. I wonder why. I wonder why he was ordered to stop work. Big Pharma. However, the current administration is being very supportive of the doctor's work. Immunity Bio is his newest company, and they're making great progress in developing treatments for lung cancer, bladder cancer, and glioblastoma. 3 brokerage firms have price targets for the shares of $5, $8, and $24. It does trade options. Although the company has debt, it's owed to Dr. Shiong. So, note, viewers beware. Biotech companies are highly risky and are considered speculations, not investments. I am long the shares, and I add to the position on weakness. Again, I urge your viewers to watch that interview, not necessarily from an investing perspective, but from the perspective of what is happening in Washington, D.C. with all the shenanigans. Dr. Shiong is an articulate, kind, humble, and brilliant man, on par with Rick Rule. Again, please watch this interview. Your comments on the chart, please.
Okay. Interesting. The richest man in LA. trying to be the biggest philanthropist he can and was shut down by politics. Sad, but good story as well. Okay, so this almost kind of looks like the nickel chart. Okay, so this is one of my favorite chart patterns. It looks like an expiring heart on an EKG because that kind of clues me in that we may be getting into about as cheap as it's going to get. So by that logic, we do have a bit of a support line right here, kind of where it is now. I mean, somewhere around there. Have a little spike down here. Okay, what was that? Was that around Liberation Day? No, a little bit after it. As far as any tradable patterns, I'm just going to go back to the general one of like kind of buy where there's a lot of price action. You know, when you get these kind of dying heartbeats, I like to call them. I just like to pick past little price notes. So like this one right here is what is that? Low $2.17, and then possibly back here would be $1.83. What's that one there? That is around 228. So just kind of around in that range. That's basically how I would play it. Maybe a limit order like right on $2.17 or a cent or two above, something like that. But it does look like it's going lower here in the short term. We've got decreasing volume, price action going down, breaking through the RSI. MACD's just starting to show some bearish action. So I would expect this limit order to get hit right back here at like 217. What was the market cap? The market cap was over 2 billion, right? Yeah, okay. Oh, wow. And so like it looks like, yeah, this is probably all the debt that you're talking about that he owns. He owns most of the shares. Okay. All right, interesting. Okay. Biotech. Immunity Bio.
That's right. Thank you for the chart analysis.
Yeah.
Okay, several viewers are looking for a viable and credible alternative to money market funds. So viewer Luis presented two of them to me, and I love them. So let's hop into that. If you would please pull up the slide for the PIMCO 0 to 5 year high yield corporate bond index fund.
Okay.
Ticker symbol HYS.
HYS, boom. Okay.
So, could you pull up that the Morningstar report? I'm sorry.
Oh, Morningstar, sure. Okay, and we're going to go here and boom. All right.
Perfect. There we go. Thank you. So, ticker symbol HYS. This fund yields 7.17%. It has a $6.86 dividend. PIMCO ranked it very high as far as process, people, and the parent. They do have a distinctive cost advantage over competitors. So when looking at this fund, if we don't have a recession and if interest rates remain steady or fall, we should be okay. The average effective maturity is 3.22 years, and the average effective duration is 2.07 years. This pays monthly cash. Their holdings are 9% government debt and 81% B-grade corporate bonds. This sells for close to the NAV, and the share price is up 1.58% year to date. We don't buy this for a rising share price, but it happens to be up 1.58% year to date. I like this fund a lot, and it has come to my attention that when brokers are forced to give their clients an alternative to the money market fund, this is a popular fund that they present their clients with, HYS.
Okay.
And moving on, there's another one that Louise brought to me called PDI, the PIMCO Dynamic Income Fund. This has a yield of 13.3%, and it pays $2.65 a share dividend. It's paid monthly. They're paying out a bit more than EPS, so that's a bit of a red flag. And of late, their premium to NAV has really shot up. It's been averaging, 15 to 17%. Now it's something like 19 or 20% premium to NAV. So I cannot recommend enthusiastically PDI today, but folks should keep an eye on it. I'm thankful to Luis because the minute he told me about this, I got in. And then, of course, I was fortunate that the Fed dropped rates and it kind of took off from there. Their duration is 3.87 years. And they hold mortgage-backed securities, corporate debt, and government debt in emerging markets. Their market cap is 8 point something billion. So this fund is quite a bit larger than HYS. So as long as we're not in a recession and interest rates on the short end remain flat or slightly decreasing, we should be okay.
Okay.
So in the interest of time, I'm not sure if you want to go to the chart on those two or not.
I can. Let's see. I don't know how much the chart is going to be useful on HYS, just because it's such a heavy dividend one, and it's one paying out every month. I've never had a whole lot of luck with charts on these ones, so I don't really want to waste viewers' time.
Okay.
What was this one? The outdoor holding? Is that the?
Yes. So this is a preferred outdoor holding company. The ticker is POWWP. They own gunbroker.com. They operate as pretty much a monopoly in this space. They yield 9%. They have a strong balance sheet. The preferred shares will be called away next May 21st at 25, providing another boost in income. We're a little late to the game on this. Perhaps we should have videos more often, or I should post these in your chat room when I first find them. This was in the teens last January, up 23% year to date. Trades thin, buy on dips only. And I encourage the team, please let's buy more of these beautiful, unique preferred stocks with juicy dividends. So I'm collecting, 9% on this, and the shares are up 23% year to date.
Yeah, look at that. Yeah, very thin volume though. Today so far, there's been 409 shares traded, and it's only $24 a share. So very thinly traded.
A limit order, let's say 2350 or 24, just might fill. You never know.
Yeah.
But I would like and I encourage the team to find us more of these beautiful preferreds. And then, in the interest of time, moving on, I call this the lightning round, a collection of miscellaneous facts and figures that I'd like to share with you.
Okay.
I'm impressed with what Paul Hewitt is doing over at America's Gold and Silver, the ticker symbol USAS. He's an incredible leader with contagious enthusiasm and operational grit. America's Gold and Silver recently announced that they're finding tetrahedrite mineralization of antimony as opposed to the non-tetrahedrite ore that they have been mining for years. Internal testing reveals that they can recover 99% of this antimony, which would make them a major U.S. supplier of antimony and the end products. When this news first broke, Haywood Securities immediately made it a top pick with a 100% price increase target. Antimony is used in flame retardants, alloys, batteries, solder, ammunition, and plastics. Most of the world's supply comes from unfriendly countries, and the price of antimony rose 300% last year. A quick comment about the Silver Valley of Idaho. Unlike most mines in the world, the ore grades do not drop as you go deeper into the earth in northern Idaho. In many areas, the grades hold steady or actually increase. Those are some really great mines up there. I've been in all of them. The Galena, Lucky Friday, Bunker Hill, and the Sunshine, to name a few. Moving on, Steve, to crypto. 6 or more Ripple ETFs are expected to launch in October. It is possible that we see a Ripple coin spike soon. So those of you that may choose to get into Ripple and exit when the ETFs are approved, that could be a viable speculation here. Also important, Chinese Golden Week begins October 1st. That's a week-long celebration. The markets will be closed. People will be on holiday. This normally invites volatility in other world markets. Be prepared. Will the Chinese traders be at their desks? No, I don't think so. Also, very recent news, the CAPE ratio, CAPE, reached 40.1 early yesterday. That's the cyclically adjusted price earnings ratio, which uses inflation adjusted earnings. Please note that this is in nosebleed territory. The CAPE ratio rarely stays above 40. In fact, it has only been above 40 for 5% of all trading days. Also, another note, the Buffett Indicator reached 220% on Tuesday. Warren suggests that anything over 120% means that stocks are overvalued. Are these turgid valuations? Only time will tell. Recall that Berkshire's cash balance remains nearly as high as it has ever been. Now we have more prominent tech stocks, the Mag 7 and so forth, so this can explain why these ratios are up in nosebleed territory. I won't predict what the market's going to do. I would just like people to be cautious and be aware of these ratios. October has a reputation for volatility and past crashes. We both know this. It just seems risky. But Steve, like you advise in your weekly updates, be sure to trim your positions if you've got a runaway gain or if your portfolio has gotten out of balance or the stocks that you've picked have reached or exceeded their targets. You do a great job of reminding your followers to ring the cash register from time to time. Pay yourself, you said on this morning's podcast. Be sure to pay yourself. Do not let euphoria and emotion replace common sense. Either utilize trailing stops, buy a hedge, or write covered calls on a spike. And next time, if you'll have me back, Steve, we're going to talk about some dirt cheap and hated sectors, energy, lumber, and the agricultural grains. I call these the nadir trio. For example, the backlog of work for Pulte, KB Homes, and DR Horton are weak, some being down as much as 30%. Recall that I worked in construction for many years, and a falling backlog can be a nightmare to manage through. Next time, we will also talk about a lovely tech stock and an overlooked retailer. Plus, I'll review the upcoming tax loss silly season, where you can make some terrific buys and good money as people unload quality companies for the tax benefit. And again, I'd like to thank you, Steve, for not being just a precious metals guy. I commend you for covering other areas in your subscriber videos, such as nickel, energy, the VIX, coal, uranium, and so much more. In closing, the US dollar index has had its worst year in 52 years. Gold has enjoyed its best year in 46 years. Friends, take a few chips off of the table if you have a runaway gain in your portfolio. Please don't make me beg you. Is it possible that the US dollar next year will have its worst year in 53 years? Maybe. Statistically, it's unlikely. Is it possible that gold will enjoy its best year in 47 years next year? Maybe. But statistically, it's unlikely. And if any viewers would like to reach me, my email is hawksfan88, HAWKSfan88 @tutanota.com. You mentioned that there might be a few questions for me that you received.
Yes.
So let's please go there.
Well, thank you very much for all of that. We got a lot of good ideas. This is awesome, and thanks for the shout out to the premium. I'm really looking forward to some platinum bets I've already got rolling around in my mind, and some possible options plays for this coming October. It's going to be a lot of fun. So America's Gold and Silver, their antimony play. You know, I reached out to them and never heard back. I didn't really follow up. It was simply an email that never got responded to. So maybe I need to follow up with that again. In the crypto world, we do have some crypto fans. Ripple XRP is going to be launching some ETFs, so there might be a little arbitrage that you can play with that. Reminder that Chinese Golden Week is coming up, so there's going to be some probably increased volatility in emerging markets. And just to reemphasize what we've been talking about for a while and sound like a broken record, the CAPE ratio is super high, over 40. Basically, a lot of the fundamental indicators for the general stock market are screaming warning signs. Yes. Okay. So we got a couple of questions here from some listeners. A. Lang, he wants to know, both of them are actually asking a lot about oil and gas. And Lang wants to know, what do you think of recent change in California attitude towards oil and gas? Newsom has been starting to stamp out some permits and stuff and approving, and I'm guessing here, but I imagine he's probably trying to set the stage for how good of a job he's done in light of 2028 coming up. Just guessing. Are there any companies that you would invest in? What are your thoughts?
Well, yes and no. We're a little bit late on this question, and I apologize for that because the my closest friends online asked me this question maybe 2, 3 months ago, and I put forth Berry Corporation. They've been in business a very long time, maybe 100 years. That ticker is BRY. They have 100 million barrels of oil reserves in California. Good stuff, the good stuff. But the stock was beaten mercilessly due to the way that California treats oil producers. And it was trading cheap in the twos and low threes, paying a good dividend and just being a quality driller, BRY.
Yeah.
But recently, they received a takeover proposal. And if we could look up the company that bought them, they bought Berry for pennies on the dollar. This is a California oil company that bought Berry very recently, and I would suggest that they would be a buy because of this shrewd buy. Now, Newsom really had no choice but to change his tune because the number of complaints coming in was off the records, off the charts. People not wanting to pay that much per gasoline gallon. What was it? $7, $8, $9, $10 per gallon. So he pretty much, you could say, was having a riot on his hands by people that are struggling. So BRY, the company that bought BRY, would be worth considering. I'll do some more homework on this and post my comments in the chat room.
What was the name of the company or the ticker of the company that bought him?
I don't have that at my fingertips.
Oh, okay. All right. Okay. Stop share. Okay.
But
And
go ahead.
similarly, he's asking about there seems to be some changes for oil and gas in Canada. Any thoughts?
Yes, I'll do more homework on that. The reserves of some of these companies are truly outstanding. My favorite pick is Freehold Royalties. Do you have any specific companies he's listing?
Nope, that was it. Oh, yeah. Let's see. Any thoughts on companies? Canadian Natural Resources, ARC Resources, Whitecap Resources, Journey Energy, any other company, including midstreams?
So Whitecap sounds familiar. It is my understanding that Lobo has a buy on that. I'll go and do more research on these companies, but Whitecap does ring a bell for sure.
Okay. And Matt is asking, and I got to give a shout out to you, Matt Bittner. He always leaves a comment on all the YouTube videos, even if it's something as simple as a thumbs up. And YouTube's algorithm really jump starts with comments and thumbs up. And thank you, Matt, for always being there and your support. Simple little things like that go a long way towards reaching more audience and hitting the algorithm to get the word out. So thank you for that, Matt. Thanks for always being here. You've been with us for a while. He wants to know about your thoughts on Rig Transocean, Ecopetrol, and Petrobras.
Okay, sounds good. Happy to do this. I went to my accounts at Haywood, RBC, Fidelity, and Schwab and looked up the research and then performed my own research. Here's what I came up with. Rig has a volatility score of 97 out of 100, and they have a profitability score of 5 out of 100. They don't have a yield. They're not profitable. They have lots of debt. Year to date, the share price has been flat. Of course, there's no PE multiple. Barclays has a target price of 4, not a buy, but a target price of 4, and JPM a target price of 5. They're a driller. They have no reserves. Let's come back to that one. That's a turnaround story. EC, Ecopetrol, out of Colombia, they have a volatility score of 76 out of 100, a profitability score of 50 out of 100. They pay a 25% dividend. They are profitable. They do have debt. The shares are up 24% year to date. The various price targets on them are 11.30 on average. They have a 6.8 PE. and reserves of 1.8 billion barrels. They are paying out, Steve, more in dividend than they're making in earnings. Moving
Okay.
on to PBR, and who doesn't like PBR? That has a special place in my heart for my college beer drinking days. PBR is in Brazil. Uh, PBR is a local hero, a national treasure, and their dividend is considered sacred among pensioners in Brazil. Their volatility score is 85. Their profitability score is 41. Their yield is 13%. They are profitable. The dividend is fully covered. Their debt to equity ratio is 92%. The shares are up. I show, looks like 15% this year. Price target of 16 and a 6.25 PE. But here's the kicker. PBR has proven reserves of 11.4 billion barrels. So the verdict is as follows. PBR is the top pick of the three, with a close follow, EC, and RIG being a distant third.
Okay. All right. Petrobras, Ecopetrol, and then Transocean, you are uninterested. Okay. Oh, Battle Bank. Rick's going to love that one.
Oh, um, lastly, let's encourage Rick Rule to see whether he can bring Sydney Sweeney on the Battle Bank team to do a few advertisements for us.
Awesome. Right on. Well, thank you, Tom. Do you have any final thoughts? Any closing out?
We're good.
Okay. All right. Well, Tom, thank you very much for your time. I look forward to our next discussion. Thank you for your support with the premium version in Substack, and you've given me a lot of ideas, and I'm looking forward to implementing them. So if you're watching here, I really like Platinum, and I think we're going to have some good things coming in the premium version. If you want to play a little more alpha, we would love to have you. There will be a link down below to our paid newsletter. Tom, thanks again. You have a wonderful rest of the day.
Thanks, Steve. Take care.
Okay,
Bye.
and thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.